Hello and welcome to this week's webinar with me, David Jones, and Aondo Markets. If you're watching the recorded version of this, it was held live on Wednesday, August the 9th at 12:30 in the afternoon. So this is a webinar that we do every week on a Wednesday lunchtime, although I'm taking a break for the next couple of weeks, so we'll be back on the 30th of August. And it splits down into two parts. It runs for about half an hour, and we look at some interesting markets to watch over the days to come, some big levels to look out for, trends, that sort of thing, where the opportunities might be. And then the second part of the webinar is looking at trading strategy. So we try and do a different strategy approach every week. This week we are going to look at divergences. So the idea where the market's doing one thing, but something like an oscillator is doing something else, can give us a hint that maybe a market is a trend is running out of steam and is on the turn. So we'll take a look at that. I think it's reasonably reliable. I think that those sort of signals they're not that common. They don't happen every day. So when they do happen, I think they can be worthy of a bit more attention. But we'll take a look at that, probably using the RSI as we go on. So I think hopefully that risk warning has been up for long enough now for everyone to read and digest it. So let's just flip over and get started. So we're using Aondo's Trade Hub trading platform for this. So all the charts are from there. And I thought, given what's happened last night, we'll start with the S&P 500. So the broader US stock market. If you're not that familiar with the S&P, I think everybody has heard of the Dow Jones. The Dow is only 30 shares. The S&P 500, as its name suggests, is made up of 500 shares. So it's a much broader based US stock market index. It was only earlier this week, on Monday, that I was moaning to myself just about how dead and how quiet markets were. And you look at the S&P over the last couple of weeks, we've had fairly tight ranges day to day. The market's made the odd run out to fresh highs, then we haven't really seen any follow through. But then this changed yesterday. You can see this is, let's zoom in a bit now on yesterday's trade. The market really started moving. I think it's almost right from the open, to be honest. Let's have a quick look. Let me bring up the crosshairs. So it started moving, to the open is 2:30. These are 15-minute candles, and the market started to rally. So from about 24.75, and I must admit, it's always the trades you don't do, isn't it? The market broke lower in the first few minutes, but then recovered, and I thought, that's got to be a buy. It's like a false breakout. The market's had a go at going lower, hasn't done it. Needless to say, I didn't buy it, and then just sat there and watched the market take off like a rocket. So the market went from 24.75 up to 24.90, but then we had, as I'm sure you've read in the news, the words from President Trump in the US directed to North Korea about fire and fury. And then this morning we've got talk that North Korea is maybe contemplating sending a missile to Guam. So it seems odd that you telegraphed that in the first place. But anyway, so when the President Trump speech, talk, whatever it was, broke last night, you can see the effect on markets. We saw a really massive reversal, giving back all of those gains that had been made by 5 o'clock UK time, and then the market ended up closing I think about 72 last night, and in the overnight market it slipped lower again. So here we are. This is where we are now on the S&P. So it does, leaving the geopolitical risk aside, it makes for an interesting setup, I think, going in today. We've seen a market that's clearly got massively spooked by what's been gone on, or what's been said in the last 24 hours, and it did this after setting a fresh all-time high. So I suppose if you were going to be overly pessimistic, you could say that, well, that's it. Maybe the high's in, and we're going to see the S&P sell off even further. I'd suggest, I think if you attend these on a regular basis, you know what a big fan I am of trend following. Here we go. We flipped it over to a daily chart now. It doesn't look quite so dramatic on a daily chart, does it? I mean, it was pretty dramatic to watch, because it really just went straight up, then straight down. But in the great scheme of things, it has not made one iota of difference to that overall trend. But what I'm going to look at in a second are some short-term levels to watch this afternoon, because I think what's going to be interesting this afternoon, we've seen for US stock markets, I think plenty of knee-jerk sell-offs on the way up, and then the market sells off, everyone steps in, buys the market, and off we go again. We go up again. So I think today will be quite telling. In the cold light of day, 24 hours after all this stuff from Mr. Trump, does everyone think, well, actually, the world's not going to end, we're going to be okay? So I think some levels to watch. First of all, some big level. For me, the really big level to watch going into this afternoon. The market, the S&P is currently 2465. We had that sharp sell-off. I can't remember what it was. We had the sharp sell-off on July the 27th, and the market sold off in a couple of hours from about 2482 down to 2460. So there's a big move. But you can see, what an effect 2460 had. It really did bring the buyers back out. So I think that's the first thing to watch this afternoon. It will be interesting clearly the market has moved lower in the overnight market. It'll be interesting if we get a push lower this afternoon, 2:30 UK time, when the S&P opens. Do we get a push lower? The market holds at 2460, then starts building a base. That looks like a great trade. Assuming this 2460 level is going to hold. If we start to slip below 2460, I think there's a couple of things we could do. First of all, wait and see how much of a real break it is, because clearly we do get lots of false breakouts along the way where the market looks like it's going to go one way, has a push through, there's no real momentum, picks out a few stops, and then reverses. So even if the market did trade below 2459.63 is the level, if we don't get much follow through, it could be another opportunity looking for the market to rotate its way back into the range. But clearly, if we do get follow through, I think the next big level to look at are these July the 18th lows, which are back at 2450, near enough. So I think it's an interesting session ahead of us this afternoon. Clearly, there's always a lot of talk, and there has been a lot of talk for at least this year about how this, the bull market in stocks in the US has lots of nervous people in it, and there's been saying it's been flattered by the likes of Facebook, Amazon, Netflix, Google, whereas the broader market, the broader shares haven't really been pushing up. It's been the tech ones that have pushed it up. So there's been all sorts of stuff written about why the market shouldn't go up, and it carries on going up, as we saw yesterday. So I think it's been interesting to see. Let's see what happens the next couple of days. I think we've got a bit more of an interesting end to the week than we had at the start of this week. So let's see what happens. Someone's asking about the DAX. We'll have a look at the DAX in a minute. So that's where we are. So the big level to watch, 2460, the lows from July 27th, and see how the market reacts if it gets down to here. But I think it's a really interesting one. But let's not forget the big picture. Before we remortgage the house and sell everything short, let's not forget where we are in the great scheme of things. We are still within that major trend, with the support coming in about 2430, and for me the big levels on the major trend are these old 2400 lows from June and back in May. So but it's an interesting session ahead this afternoon. So yeah, let's see. Let's just while we're on the US markets, just have a quick look at the Dow, because I think after the payrolls, we had the payrolls, the non-farm payrolls on Friday, US unemployment numbers. Expectation was for plus 180,000 jobs. It came in at plus 209,000 jobs. I think the Dow briefly moved out to fresh all-time highs on Friday, and it would have, I'm guessing, it would have moved out, yeah, there we go, fresh all-time highs yesterday before the market turned around. So the Dow, punched as high as 22,178-ish yesterday, then turned around. So again, like the S&P, there are some big levels to watch on the Dow this afternoon. Currently trading at 22,030-ish. We've got lots of old support on the Dow actually. 21,980, 21,960. Bit of a bigger level back here, 21,940-ish. So like the S&P, I think if we get it, the opportunity could be if we get a push lower in maybe the first hour, and then a bit of stability, and the market thinks, well, actually things aren't as bad as they could have been. While we're on stock markets, we'll look at two more, then we'll do our strategy session. Let's look at the DAX, because the DAX, so the German DAX has taken, I think, a much bigger pounding in recent weeks when you look at what the S&P has done. You know, the S&P yesterday hit fresh all-time highs. The Dow hit fresh all-time highs. The DAX, you know, we've got to go back to June till we see the old highs. So the DAX has been definitely sort of ploughing its own furrow. You could argue that the trend for the DAX is still up. Let's have a look. I think it is pretty definitely still up. If we go back to June 2016, we pick up the US election lows. There we go. So that trend is still up, but we've been having, you know, compared to other markets, quite the counter trend move in recent weeks. So I don't know, it still looks weak. Bits of support at 12,070, then bigger support out 11,934, 11,8350. So there's still scope for the market to weaken, and clearly if we were going to draw our little trend line on the top, you know, the DAX, you know, needs to break through, let's say 12,370 to shake off this correction, which is 240 points higher than where we are now. So the DAX has definitely been underperforming. It does seem, you know, that when the good news comes out, it doesn't really lift the DAX. When the bad news comes out, it seems to weigh on the market. So it does have, I think, quite a bit of, you know, short-term negative sentiment anyway. And finally, let's just look at the FTSE. Let's have a look at that. I mean, it's been a bit dull, maybe the FTSE the last couple of months, but you know, you can see we've got the highs up here, 7,600, support down here, 7,290, and we're where we are now. You know, so it's all, I don't know, it's pretty boring. I think if you're going to watch stock markets, US stock markets are clearly the ones to watch, and I think we've got some really good big levels to keep an eye on this afternoon. Right, let's do our little strategy thing. Let me just juggle my screen around a little bit here. So what we're going to do, I'm going to do a little bit of my never particularly artistic scribbles just to talk through. If you've been attending these things for a while, you know, you'll know I'm not a massive fan of having lots of different oscillators on the chart and you know, just scribbling loads of things. I can't get it to come up. Hold on a second. What's going wrong here? Okay, hold on. If I do that, I'm going to 2. It's my bit for BMW's marketing. Here we go. Right. How's that? That's good. Right. So if you've attended a few of these things, you know, I'm not a massive fan really of having Fibonacci and moving averages and stochastics and RSIs and all this stuff on the chart. You know, I'm a big fan of looking at trends, looking at big levels, and trading off that. But I think something that can be useful, because it's not that common a problem, is this idea of divergence. So if you're using oscillators, rather than looking at the traditional, you know, maybe the overbought, oversold thing for oscillators, is having a look at this idea of divergence. And what divergence is, if a market is doing this, whatever market it is, so a market, there's our market in a downtrend, so we're making lower lows, lower lows, lower lows. And we have our oscillator, which is, you know, broadly carving out a similar sort of pattern, maybe dips below oversold, and then the market rallies, the oscillator rallies, market turns down, oscillator turns down, but does that. So this is the idea of divergence. So the market's made a lower low. So if you were just looking at the price, you'd think, well, this market is still really weak. But the RSI, or wherever it is, has made a higher low. So it's as if the RSI is starting an uptrend, even though the market is still in a downtrend. So it's this setup here that's known as divergence. So that bit's known as bullish divergence. So it can be a suggestion that maybe the trend is running out of steam. We're losing a bit of momentum. And on the flip side, at market tops, you know, it looks something like this. The market goes up, RSI goes overbought. Market moves a bit higher, RSI moves higher, but doesn't go overbought, or makes at least a lower high. So again, we have here, you know, higher high, higher high, higher high, 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 but then there's failure. So this setup here, this is known as bearish divergence, where the market's pushing up, but the RSI makes a lower high. And I think, as usual, it's easy to scribble it down and have the perfect example. But let's just take a look at how it looks in the real world. So let me just flip this over. Oh, why doesn't it want to flip over? Hang on a second. So, right, so now we should be back on our market chart. Okay, let's stick with the FTSE. I've not trying to find a perfect example here. So let's do the example we've got. So let's go to RSI. So we'll scroll down through the 8 million different oscillators you can apply these days. 10-day RSI, that's fine by me. And there we go. We have a reasonable example back here. It's not perfectly textbook. We'll look at a shorter term example in a minute. But if you look at here, the market's pushing up. This is the FTSE 100. Pushes down to a low, these lows here, back in June. And the RSI goes over sold briefly. There you can see it dip below that 30% line. And the market pushes lower still. But look at what our RSI is doing. Our RSI is just about made a higher low. So it's not the most fantastic example of bullish divergence, but that's what it is. That's what we're looking at there. Is that bearish divergence up there? Not quite. Let's change it to an hourly chart. Let's stick with the FTSE. We change it to an hourly chart. We'll have a few more signals, I think. Here we go. Good example here. Actually, there are a couple of good examples. Now, there's the best one. So the market, this is August the 2nd. So the market slips to a low between 11 and 1 o'clock in the morning, and then has a little rally, drags the RSI up, as you'd expect, and the market slips a bit lower still. So we see we do break that old low. So that old low was 73.89, and the market the next day slips to, it only breaks it by 5 points, but breaks it nonetheless. So breaks it, but our RSI is making higher lows. So hopefully we can all see that. So the market goes low, lower, RSI makes higher lows. So that is bullish divergence. And then up here, again, it's not perfect, but we've got quite a bit of bearish divergence that's built up over the last few days. The market pushes to a high, RSI is overbought, market pushes a little bit higher still, RSI has fallen away, market pushes higher still, and we've still got lower highs on the RSI, so bearish divergence there. And what we'd get now, the setup, if we were looking for this setup again, what we'd need to see over the next day, FTSE pushes to a new low, so it pushes below that old low, 74.73, pushes a bit lower than that, but we get a higher low on the RSI, and that would set up bullish divergence. It's not perfect, like anything. It's not perfect, but I think, you know, if you want an aggressive strategy for trying to pick a turning point, I think you can do a lot worse than this. You know, if we're looking at this sort of setup back here, August the 2nd to August the 3rd, if we see that, and then we see the market start to move higher, and maybe, okay, let's say we don't even buy until an hour after, so we're buying up there at 74.20. If that pattern is going to be a valid one, well, by definition, the market shouldn't really take out that low. So if we're going to be a buyer at 74.20, we could have a stop below 73.84. Okay, so that's our RSI divergence. Let's have a quick look at euro dollar for similar sort of signals. So, and then we'll have a look in a bit more detail. There's not much on the hourlies. Let's flip out to the dailies. I think the dailies give us a bigger picture to talk about anyway. So actually, can we see any? I don't think we can see much here at all. Actually, there's not much. Actually, maybe it's a good example that it doesn't work all the time, because the trend in euro has been so strong. So the market hits a high, RSI is overbought, market pushes higher again, RSI, you can see, does not go as overbought as it did last time. So a suggestion that maybe the trend is running out of steam. It did sell off for a week, but then of course the euro powered higher. So that's the RSI. We'll keep it down there just in case anything interesting comes up while we're flicking through. But now we're on the euro. Let's talk about this, because this is, I think we talked about this last week, because the trend, you know, the trend has been so strong. First of all, the trend has been incredibly strong, and we broke that big level. We broke a 2-year high on the euro. Just to remind ourselves, this is the weekly chart. So it broke through the August 2015 highs at 117. And as usual, we've got to wait and see, is this a real breakout, is this a false breakout? We have had, you know, a bit of weakness since then. So over the last week, the euro has given up some gains. I think I said this a week ago, you know, on certain platforms you can see which way clients were positioned, and I looked before last week's webinar, and you know, nearly 70% of client positions were short the euro because people cannot trade with the trends. You know, we wonder why. Maybe we don't wonder, but why, you know, people lose when trading, and because they have a real problem trading the trend. So even though we've had a 5-day-ish sell-off in the euro against the dollar, it doesn't really change that big picture. You know, we've come off about nearly 200 points, I suppose, from those highs, but it doesn't really change the big picture of that trend. So for me, you know, my approach would be to view this as a buying opportunity. So viewing, well, where do we get in? Where do we get into this? And where can we put a stop loss to manage our risk? So let's flip it to the hourlies and see. Well, here we go. There is, I mean, there's an aggressive trade now. Again, if you thought, I mean, again, I'm presuming this was it driven by last night's Trump talk? Probably not, actually, because the market was moving before that. There's an aggressive trade here. You know, if you believe in that trend in euro dollar and you want to buy into that trend, the aggressive trade is to be a buyer now. So where are we? 117.37. So we had the old lows from the end of July, around about 117.20. The market came down to it. This is after the payrolls on Friday, of course. The market came down to it, saw a sharp sell-off, bounced back in the earlier part of this week, bounced back nearly 100 points off that level. We've come back down to it again, and we've seen since 3-4 o'clock yesterday an appetite to be a buyer. So I think, again, maybe the aggressive strategy, we're a buyer here with the stop loss underneath those lows, and those lows are 117.50. 15 is the low. But even if that breaks, you know, we've got, because we have had such a good trend in euro dollar this year, like the stock market, we've got so many levels left on the way back where we'd expect buyers to come back in. So I think for euro dollar, that's maybe the interesting level to watch going into this afternoon to see how it performs down here. Let's have a look at pound against the dollar, because again, we have seen, you know, the story for much of this year has been one of dollar weakness, but we have seen, since maybe the payrolls on Friday, maybe a little bit before that, we have seen something of a comeback for the US dollar. So let's just pick up on, this is pound against the dollar. You know, and again, even though the market's sold off, it does not change that bigger picture trend, you know, because look what we went through in May, you know, from May to June, so about 5 or 6 weeks, we saw this correction in the pound only for it to push higher again. So, you know, so my view at the moment would be, well, the same thing is going on. You know, with no market moves in a straight line. You can see there's a big level straight away to keep an eye on. Oh, relatively big level off the daily chart, 129.30. Let's flip that over to an hourly chart, see what that looks like. There we go. So we have these old lows. It's a really interesting one, actually. So these old lows back here from July the 20th, just before the market ran up 300 points, 3 cents from here. You know, maybe if you're cautious, you don't want to be a buyer just yet. You know, we've seen it test it yesterday and rally, and we're still a little bit weak. But I think, again, maybe one strategy, we're looking at an hourly chart here. If we get an hour where it stops going down, you know, there's an argument for being a buyer and whacking a stop loss below 129.30. You know, it gives us a nice low risk entry into the trade if we think it's going to recover back all this ground that's been lost. So I think maybe the pound's the more interesting one to watch out of pound and the euro going into this afternoon. Let's sort of start wrapping things up with a couple of things, a couple of other markets, gold and oil. Let's do oil first of all, because gold, I mean, gold's an interesting one because, of course, in times of trouble, gold traditionally does well. Let's take a look at oil. I've talked a bit about oil in the last few weeks because I've been trading it a lot more. And I'm currently in, I've been in for a week on this trade in oil. It's interesting, I think, because if we start off with the daily chart on oil, we've seen this rally off the June lows, and we've seen what a big level over the last year, sort of $40 to $43 a barrel has been. When we've seen oil back down in this area, the buyers have stepped in and the market's got lifted up. And the same thing's happened since June. You know, we've seen this rally. I think the week before last, we had 5 days on the trot where oil went up every day. The price of oil went up. But now we're in, I suppose you could say we're in a bit of a, maybe a bit of a junction for oil. If we were going to draw our trend from maybe off these highs like that, you could argue that the trend for much of this year is still down. You know, we've seen rallies, they run out of steam, rallied, run out of steam, rallied, question mark, where does it go next? So I suppose you could say, well, once again, we're seeing a bit of nerves ahead of this trend line, and it definitely has lost some momentum this week for oil. Let's have a look at the hourlies to see what happens next. So like I say, I've been in the trade since Thursday last week, but you can see it has really stalled. We've had some good moves in oil, and I bought in there somewhere, I don't know, there, maybe. But with a stop loss below these old lows, and the market has gone down a bit, gone up a bit, gone down a bit. So I think there's clearly, I think a level maybe for the short-term traders to watch. If we do get weakness in oil, are these old supports, sort of 48, I suppose from 47.80 through to $48.50 a barrel. I think that has been good support. We've seen it just earlier this week, August the 7th. When was that? Yesterday? No, 2 days ago. August the 7th, pulled down to it again. And we had a really good, half decent rally off the back of it, 120 point rally off the back of it. So for me, what I want to see is it push back up to here and break out again. But if it starts to look like it's breaking down, then maybe the latest run in oil is running out of steam. Let's see. But I think it's been a bit of a boring week, but that has left us some good levels to watch. And finally, gold. So to wrap things up, let's take a look at the price of gold. As you would expect, with a bit of geopolitical nerves, this is gold. This is it's an hourly chart of gold. So we've seen a bit of strength in the price of gold. It did sell off. Interesting enough, it did sell off yesterday. First of all, the stock markets were going higher. That was the move that gold was doing. So stock market was going up, and gold went from about 12.60 an ounce back towards 12.50. Since then, we've put on about $20. So let's take a look at the big picture for gold. I think for me, the big picture view for gold still remains the same. We're still in a bit of a recovery mode for this year. And we do see this pattern where it goes up, then comes off for like 6 weeks, goes up, comes off for 6 weeks, and so it goes on. So I think the immediate target for me is still back up to 1300. Any weakness back towards below 1200 looks like a buying opportunity. If it could maybe break 1275 in the next couple of days, that's maybe the trigger that sets up a push again to 1300. But I think there does seem to be an appetite to be a buyer on weakness for gold. So for me, if it pulled back to this sort of area, not that it looks like it's going to do that anytime soon, then maybe it could be a buying opportunity. So we'll start wrapping things up there. But I do think because of what's gone on, it's been a quiet week. We had the payrolls on Friday, a very quiet day on Monday. But because of what's happened yesterday, I think the US stock market is the one to watch this afternoon. And the one I'd watch is the S&P 500. And really it's those levels. How does it do? If it opens up weaker and pushes lower this afternoon, does the late July low holds at 2460? So I think it could be, we saw a big day yesterday. It went from 2490 back to 2470, so a 20-point range in the S&P, so just over a couple hundred points in the Dow, and by the low volatility environment that we're in at the moment, that was a big day yesterday. And things do happen in August. We had I think the Chinese crisis, was it 2 years ago, when markets absolutely fell off a cliff. Then of course we had the financial crisis. I think it's the 10-year anniversary of the financial crisis. So August is can be a tricky month for stock markets. Let's see what happens. Yeah, that's the August 2015, the Chinese inspired crisis. I think I remember that. So let's see what happens. But I think there's some obvious levels to watch this afternoon. Let's hope all this talk is just all saber rattling between Mr. Trump and North Korea. Let's see what happens. But I think some big levels to watch later on. What do you think of cryptocurrencies? Do you know? I think did Bitcoin hit fresh all-time highs again yesterday? I've never traded it. They're so volatile. I find them quite scary. I got it completely wrong 5 or 6 years ago when I first heard of them, and I thought this is just a flash in the pan. So you should do exactly the opposite of what I do. So I don't, I very rarely look at it, to be honest. I think there's enough stuff out there to trade, but there's no reason why you can't trade it the same way. I think what put me off, I think the size, I think the minimum, I did look at trading it with someone a couple of months ago, and the minimum size was something like a 35 grand position. Maybe I need to, if I really wanted to trade it, I should find a way of trading it smaller. Because of the volatility, I think you need wide stop losses. You need to give the thing a bit of room to move around. So for me, I'd want to trade it a bit small, but I've never traded it. But clearly, I think it's a very interesting market. Right, let's finish there. We'll wrap things up. So I'm taking a break for a couple of weeks. So we're back on the 30th, assuming we're all still here by then. So we're back on the 30th of August. Any questions, you can follow me on Twitter. So on Twitter, I'm at Jones the Markets. I haven't tweeted, I need to start tweeting again. If you have any questions about what we've covered today or anything else, just drop me an email. More than happy to answer emails. David@tradeafter.com. And I write about copy trading with Aonda. That's maybe what Aonda are better known for, is copy trading. So if you go to tradeafter.com, you can see my blog of a real account with copy trading. But it is bang on 1 o'clock. What a professional. Finished right on time. We'll wrap things up there. I will enjoy. I'm going to be in sunny North Wales for my holiday. I'm giving my son a taste of staycation. So yeah, let's hope the weather holds out. But I'll see you all again in a couple of weeks' time. And I hope your trading goes well.